In an era of economic uncertainty, rising tariffs, trade wars, and shifting interest rates, people are turning to one timeless asset: gold. But why in 2025 are so many investing in gold? It's not just a trend, it's a signal, a reaction to a growing storm on the horizon. Today, we dive into why gold has become the refuge for investors around the world. The global economy is on the edge, trade wars are escalating, and tariffs are shaking markets. In fact, according to a report from the Financial Times, 2025, global tariffs on imported goods have risen by nearly 30% since last year alone. The US-China trade war, European Union tensions, and shifts in trade alliances are all contributing to economic instability. With such unpredictability, investors are looking for safe havens, and gold, often seen as a hedge against inflation and geopolitical turmoil, fits the bill. Gold, unlike paper currencies, is not tied to any one economy or government policy. It's a store of value that remains unaffected by the turmoil around it. The housing market is slowing down too. With interest rates at historically high levels, home buyers are being priced out. Mortgage rates in the US have soared past 7% in 2025, the highest they've been in over 20 years. This has led to a sharp drop in housing sales, as reported by the Wall Street Journal. Homes that were once considered valuable investments are now stagnant in the market. Home prices in major cities have dropped by nearly 15% year over year, while affordability continues to diminish. For many, the real estate market no longer offers the same promise of stable returns. And with the stock market's own volatility, gold shines as a more reliable option for wealth preservation. But the real alarm bell came just recently, when the latest jobs report from the US Bureau of Labor Statistics showed a significant slowdown in job creation. In fact, in Q1 of 2025, job growth plummeted to the lowest levels in over a decade. The unemployment rate remains steady, but the drop in new job postings signals that businesses are slowing down their hiring plans, and the economy is starting to lose momentum. Economic slowdowns mean reduced spending, lower profits for businesses, and ultimately more uncertainty for markets. In such an environment, people are seeking the stability that gold offers, especially since it traditionally retains value during times of economic contraction. So, why gold specifically in 2025? The answer lies in its historical track record and its inherent value. When inflation rises, when currencies fluctuate, when geopolitics get tense, gold tends to rise. In 2025, we're seeing a renewed appreciation for this precious metal as it continues to outperform traditional assets in an unpredictable world. According to Bloomberg's analysis, gold prices have risen by 25% in the last year alone, while major stock indices have stagnated. In uncertain times, gold is more than just a shiny metal. It's a shield against the storm. As we move through 2025, consider adding gold to your investment strategy to protect your wealth. For more insights into the world of investing and strategies for building wealth and personal development, hit that subscribe button. Stay ahead of the curve and stay informed. Join us for more and never miss out on the latest market trends that could shape your financial future. Imagine waking up to headlines screaming, "Trade war ignites global recession." Your stocks plummeting, your home's value frozen, and jobs vanishing like smoke. What if I told you one ancient asset is surging 30% this year, shielding fortunes amid the chaos? Gold isn't just metal, it's your economic lifeboat in 2025's storm. But why are savvy investors flocking to it now? Stick around, this could save your portfolio. And let's start with the elephant in the room: economic uncertainty fueled by tariffs and escalating trade wars. President Trump's aggressive tariff policies, imposing up to 60% on Chinese imports and 10 to 25% universally, have sparked retaliatory measures worldwide, as reported by Reuters and the Tax Foundation. These aren't just numbers, they're a $1,300 annual tax hike per US household, slashing GDP by up to 1.3% before retaliation even kicks in. JP Morgan economists warn of a 0.6-1.0% GDP hit to trading partners like Brazil, while the IMF calls it a significant risk to sluggish global growth. Picture this: supply chains disrupted, prices for everything from iPhones to steel skyrocketing. Reuters estimates a $2,300 iPhone under full tariffs. Businesses freeze hiring, consumers cut spending, and markets plunge. The Dow dropped nearly 4% in a single day amid the shock. CEPR analysis shows direct US-China trade could collapse, distorting global value chains and causing welfare losses up to 2% in the US alone. In this fog of uncertainty, echoing the 1930s Smoot-Hawley tariffs that deepened the Great Depression, gold emerges as the ultimate safe haven. Why? It's not tied to any currency or stock. It's a tangible store of value, immune to trade barriers and inflation spikes. As the dollar weakens, down to a 3-year low per CNBC, gold's allure intensifies, drawing investors fleeing volatile equities and bonds. Forbes and Investopedia highlight how gold thrives in such environments, historically rising 25% during crises like 2008. In 2025, with tariffs potentially fueling stagflation, gold isn't just smart, it's survival. Now layer on the housing market's icy stall. High interest rates, stuck at 6.7-6.9% per Freddie Mac and JP Morgan, have locked homeowners into ultra-low pandemic-era mortgages below 4%, deterring sales and slashing inventory to historic lows. Forbes reports home prices rose just 2.3% annually in May, the slowest since mid-2023, yet affordability craters. Median payments hit $2,675 monthly, up 5% year over year. The New York Times details how rates doubled since 2022, freezing the market. Existing sales down 2.7% in June. New homes at a 10-month supply glut. Redfin notes 15% of contracts fell through in June, the highest since 2017, as buyers back out amid recession fears. US News predicts flatter growth through 2030, with sales muted until rates dip below 6%. But tariffs could keep them elevated, per Wells Fargo. This housing crunch ripples. Construction jobs evaporate, consumer wealth erodes, and spending slows. Enter gold, a non-correlated asset that hedges real estate woes. As home equity freezes, gold's liquidity and inflation protection shine. Bloomberg notes it's up 30% year-to-date while housing stagnates. Investopedia experts affirm gold's role in diversifying away from property risks, preserving value when bricks and mortar falters. The plot thickens with the latest jobs report signaling a full economic slowdown. The August Bureau of Labor Statistics data, released September 5th, shows just 22,000 jobs added, far below 75,000 forecasts, with unemployment ticking to 4.3%, highest since 2021. Revisions slashed June to a net loss of 13,000, the first since 2020, while July rose slightly to 79,000, but 3-month average hiring is a dismal 29,000. CNBC and CNN report manufacturing shed 12,000 jobs amid tariffs, federal employment down 97,000 YTD from cuts. ADP's private payrolls just 54,000 in August, half July's. Black unemployment hit 7.5%, youth at 14%. Canaries in the coal mine for recession. Reuters warns of stagflation, tepid growth, rising prices from tariffs. Wage growth slowed to 3.7%, below inflation. Real income shrinks, spending craters. The Guardian notes 85,979 layoffs in August, up 39% monthly. As hiring stalls, JOLTS openings at 7.2 million, lowest since 2021. Gold beckons. Forbes and Bloomberg emphasize its inverse correlation to job weakness. During slowdowns, gold rises as a flight to safety play, up 21% YTD amid this malaise. With Fed cuts looming, 96% odds in September per CME, gold's opportunity cost drops, supercharging gains. So why buy gold in 2025? It's simple. In this perfect storm of tariffs igniting trade wars, housing locked in ice, and jobs evaporating, gold is the unshakable anchor. Investopedia details its role as an inflation hedge and portfolio diversifier, up 30% annually in crises. Forbes predicts $3,000 plus by year-end, driven by de-dollarization and central bank hoarding, 900 tons forecast by JP Morgan. Bloomberg affirms, as tariffs fuel uncertainty, gold's safe haven status propels it to records. Physical gold ETFs like GLD or mining stocks, options abound. But act now. Reuters warns of supply squeezes from ETF inflows and Asian demand. Gold isn't just investment, it's insurance against 2025's volatility. Ready to fortify your finances? Subscribe now for more cutting-edge investment news and self-development strategies to thrive in uncertain times. Hit that bell, your next big move awaits. Invest wisely, the gold rush is on.
Your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.